Alright everybody, welcome back. This is another video reacting to real estate advice on the internet. I'm Zachary Ireland. Welcome to my YouTube channel. If you've never been here before, I do all sorts of finance related topics. Lately I've been doing more of these reaction and commentary on videos because I am a real live real estate agent and investor in Sudbury, Ontario, Canada. We work with investors from all over the world, but especially in Canada and in the Ontario region. We really like working with people, teaching them how to build wealth in real estate. And I personally really like debunking bad real estate advice on the internet and kind of exposing why they might be giving it, because I think a lot of people miss, there's an agenda behind a lot of this stuff. So let's get to today's video. I've been watching a few of these reels on Facebook Reels. This guy's name is King of Commercial Real Estate, and his name is Dolph DeRoos. So let's watch some of the video. Or let's watch the reel and react to it. Okay, so I can already tell he's going to start going to leverage. He's going to talk about leverage, which is, it's a good topic to learn about. You do need to learn about, leveraging your capital rather than just buying one-to-one. I think it's important to understand the difference between buying things on margin, which is on leverage, and buying things cash. So I do believe, I think I've seen this one before. I think he does go into that. But I just want to immediately point that out, because when someone starts talking about leverage, they're usually going to pitch you on having no money. And that's a really key factor in these kind of guru genre of real estate stuff. So let's see what he has to say. Yeah, there it is. Okay. All right. So it's a huge red flag when someone says, I can teach you how to do this with no money. They do this for Amazon FBA, fulfilled by Amazon. They do this for website building. They do this for drop shipping. They do this for real estate investing, which is probably the most heinous of them because it has the highest barrier of entry. They do this for stock investing. They do this for Forex investing. There's gurus in every topic, that you can think of. Anywhere that people are legitimately making money, there's probably a guru selling a course or selling an insider group or selling education that has to do with that legitimate stuff, but in a non-legitimate way. And, it's especially heinous in real estate because, people do become wealthy in real estate, but often, these gurus kind of like to obscure how that happens, and they like to make it seem like anyone can do this. And while that may be true for a very, very, very small number of people, for the vast majority of people, it's a terrible idea to invest in real estate with no money down, and it's a terrible idea to invest even with very, very high leverage. So what zero money down would be is infinite leverage. So let's see what else he has to say. Okay, so that's kind of how the reel ends. Leverage is your friend. And I do agree with him here. $20 million buys $100 million of real estate. You're going to be cash flowing on $100 million of real estate. You're going to be enjoying appreciation on $100 million of real estate. You're going to control $100 million of real estate. But he contradicts himself a little bit with saying you need $20 million to do this. You do. And you might not need 20 million. You might only need 10 million. You might not need 10 million. You might only need 5 million with some strategies. But you do need some money. There's no zero money down, and there's no zero effort, and there's no passive income in real estate. All this stuff is just a fantasy, and I'm almost certain that he's going to, be pitching on his website, whatever. He's going to be pitching some course, something that you would pay a few $1,000s on your credit card to get, and he would try and be like sucking you in, pulling you in. The only way that I can reasonably see someone being successful in real estate investing with no money down, is if they have someone who loves them, someone who cares about them, and is willing to put up that money for them to get started. That's really like the only scenario I could recommend this. If someone is fully willing to part with their hard-earned money and let you give it a go and give you a chance and give you an opportunity to invest, to improve the property, maybe get some equity, maybe work on a refinance. Even that I probably wouldn't recommend on your first one. Unless you find that, like a family member or a good family friend, this is just, like I said, this is just kind of a fantasy. I'm probably not going to be able to break down 100% why in a short video, but just know that there's a formula to this. There's a pitch here. He's searching out for the desperate 50% of people or more that have no savings, that struggle to save money at the end of the month and are looking desperately for a way out of their situation. So he's using real estate because he knows real estate's a great way to build wealth and to, he's probably done it himself, honestly. But this is not the way that he did it. I guarantee this is not the way that he did it. None of the people that talk this way actually did it this way. They did it a different way, and they're pitching you their magical guru 0% down way, but that's not the way that they did it, and that's not the way that we recommend you do it, and that's not the way any of the wealthy real estate investors would do it if they were to have to do it again. One possible exception to this, and I'm really not a big fan, I'll be fully transparent, I'm not a big fan, but one really big exception to this whole thing is flipping properties without owning them, which often is called wholesaling, which is basically this idea of getting a hold of a deal outside of a fair market system and using that knowledge for your own advantage. So being able to flip, a property without ever owning it, flipping the contact information essentially from the person who needs to sell to a person who wants to buy at a low price. So that's one possible exception. You could make some pretty outsized returns doing that. But again, you don't really need to be putting any money into that. It's more of a wage kind of thing. Like, I'm putting in this much work to find these deals, and then I get paid this much for that information. It's similar to, I'm a real estate agent. I would never pitch somebody as real estate as a get-rich-quick investing scheme because I do one deal, I make a few $1,000s. No, I put in a few hours, sometimes dozens or hundreds of hours of work into a deal, and then I get paid at the end of the deal. So technically, it's a really terrible investment in a way because there's no return of investment until the very, very end. There's no return on investment of my time until the very, very end. And sometimes there's no return at all. And wholesaling is much the same. You could do the flyers, or you could talk, network at events, or you could talk to face-to-face with people at rundown houses and try and basically pawn off their property to real estate investors and give them, a fraction of what their house is really worth. You can do that. You're trading your time for money. If you're looking for a better way to trade your time for money, I would invest in education, but not this kind of education, like traditional education. In Ontario, if you want to become a real estate broker, you go through an education. It takes less than a year, takes several, $1,000 you do have to invest, and time to learn things, and then you're going to be an apprentice for someone. You're going to learn from someone. You're going to learn how the business works, and then you might have a pretty good income coming in from that. But I wouldn't recommend, skirting the traditional system and trying to do like wholesaling, or, sometimes it's essentially scamming elderly people out of their homes. I wouldn't necessarily bank on that being, an alternate income or a passive income, because it's definitely not. Wholesaling in some ways is the riskiest way to invest in real estate. Even though it does have great returns, it is the riskiest way, because essentially, you're not insured. There's no way you can insure against a scam because it's illegal. So, and I'm not saying all wholesaling is illegal. Some of it is within the law, but a lot of it is not. So you basically, if you've ever watched mob movies, they go around to the shop owners and say, oh, it'd be a shame if something ever happened to your shop. And because they're lending money to these shop owners a lot of the time in illegal ways, non-traditional ways, they have to, pay for this service, for this insurance. I'm kind of getting off into the weeds here, but all this to say, I'm pretty sure his pitch is going to be, you go out, you do lots of work and find good deals, and then you pitch those good deals with a little bit of embellishment and embellishing your resume. You pitch these deals to third-party, non-bank investors, and then with a combination of their money and a mortgage, which, again, how are you going to get a mortgage? You have no experience. You don't have income. I don't know. But you're going to take those funds, and you're going to go get a mortgage. You're going to buy the place, and it's going to cash flow for you. It's not going to cash flow enough to pay everybody back, by the way, because there's a reason why banks want, 20% equity in a property. Part of it is risk mitigation, but the other part is naturally real estate tends, and this is what you'll find in the literature, is that real estate pricing tends to create a zero profit situation. Tends to. Doesn't have to be that way. Skilled people can squeeze more profit out of their properties, but on the open market with full and open information, real estate profits tend towards zero at 20% ownership, at 20% leverage, at 80% leverage, 20% equity. Real estate tends to be about a zero profit game, and you'll find that across markets. Some markets are even more competitive than zero profit. People are willing to put money in just to own the real estate. And in Sudbury, luckily, we do have a cash flow, pretty good cash flow market, so you can find deals that do cash flow day one. There's other factors people don't really account for, like maybe there's trash collection you have to pay for, snow removal you didn't account for in your cap rate. I already mentioned trash removal, security fees, property management. These things are in addition to the normal bills that people account for in a cap rate. So again, I would double down and say normally real estate is a zero profit game when you first get started on 20 or 25% leverage. But as you progress in your ownership, start to pay down a mortgage, as the term as you come to a terminal in your mortgage, the profits just increase. Not necessarily on a percentage basis, because at the highest leverage, generally your returns for a stabilized cash flow will be the highest. But as the mortgage progresses, your cash position will be increasing. So what that also means is it goes the other way. So when you're working on 5 or 0% equity, you're probably in a negative cash flow position. So the only way that you can make something like that work is you quickly try and increase that equity and then get out of the deal before you go bust. It's like the analogy I'm thinking of for some reason is these underwater divers that dive into underwater caves. They see the cave, it's really pretty. They swim out and everyone's fine, everything's good. But the one time you swim under the cave, it's a little bit further than you expected, and you can't hold your breath and get all the way back. So you're stuck underwater. That's like a bankruptcy position, and you've basically, squandered all of your, if you've put any equity in, you've squandered your equity. Just one more note that I'll make for this. If somebody is willing to do a real estate deal with you and you will have no skin in the game at all, they're just willing to 100% finance, I really do hope that they're related to you or that they know you personally on a personal level. Because again, if someone's willing to invest that in you, that's a huge risk for them. And like no person that's, accumulated their own capital and done, their homework should probably be doing that. The credit system is great. Like banks don't have to know you personally because they have this paper trail on you from previous things that you've done. Private investing, they have that as well, but there's another degree of security that they have to have because they're, by nature of it being a second mortgage, I know maybe this is going to go above the head of some people. This is kind of in the weeds, but the first mortgage, let's say it's for 80%, and you get a second mortgage for closer to 20%. The second mortgage is always paid second. That's why it's called a second mortgage. So if something were to happen, property needs to be sold, it needs to be liquidated. Usually you're not going to get as good of a price in that position because you're desperate. First mortgage sells first. Second mortgage is not going to recover 100%. It's just not going to happen. If you're liquidating a property, if something goes wrong, it's because the property's not worth what you thought. Somebody's going to lose some money on that. And usually a second mortgage investor will be sophisticated enough to understand that, and they're not going to be paid first. So they're going to want higher interest rates. And what that adds up to, again, I'll just say it again, what that adds up to is usually a negative cash flow position. Doesn't matter if it's commercial, doesn't matter if it's residential. If you plan on doing improvements, if you plan on taking that, 80 or more percent leverage and fixing the property up, flipping it for a quick sale, I would still recommend against that, especially for beginners. If you're experienced, if you've done this kind of thing before, if you've owned properties, that's a perfectly fine strategy. I'm all for it if you know what you're getting into. But if you don't have the money, that's not your strategy. It's just too risky. It's just too leveraged. It's kind of a reverse thing. Whatever the gurus are saying, you should be thinking, how can I do the opposite? And how you can do the opposite is buy something that is safe, that has cash flow on as low leverage as you can. Get yourself into a safe position where you do have a savings and you do have a large equity position, and then you can use that to go invest in flips if you want to. You probably won't want to at that point, but you can. You'll have that safety net and that equity. If you have nothing, flipping is not for you. You need to get savings. You need to get a bigger income. You need to retain some of your earnings at the end of the month, every month, for several months or several years, and buy something on your own. Then, once you have experience, once you've done this kind of thing, once you understand real estate and the fundamentals, you've gotten a mortgage, you've talked to tenants, you've been a property manager for yourself, or you've interacted with property managers remotely, then you go to people with money and you say, let's go 50-50 on this so we can both benefit. That's the position you want to be in, not this. Anyways, sorry if that was ranty, forgive me. Just to recap, I'm Zachary Ireland. This was Dolph DeRoos on Facebook Reels. I'll put the link in the description of the video if you'd like to watch the reel again. And I'm a real estate agent in Sudbury, Ontario. We work with real estate investors from across Canada and the world. If you'd like to invest in this area, that's what we do. So we also do property management, everything taken care of. We understand every single part of the real estate buying process and managing and selling process. If you ask me, don't sell. But if you do have to sell, we can also take care of that for you. And we'll see you guys. Excuse me. We'll see you guys in the next video. Thanks for watching. Bye.